Bitcoin has taken another turn for the worse and has, as of the time of recording, hit levels not seen since mid-February. Technical analyst Ron William joins us now from RW Advisory with his thoughts on not just Bitcoin, but other cryptocurrencies that you can trade on the IG platform. Ron, welcome.
Hi there.
We have spoken about the slide in Bitcoin before, and you have highlighted the potential downside risk that you've been watching. Where are we precisely in terms of the performance of Bitcoin?
Well, within a corrective phase, we're still there within an ABC breakdown of that corrective stage. So we've had the fall from the December peak, which we spoke about last time, followed by a rally from the 200-day long-term moving average, and now the rest of the fall. So it's behaving in a very natural market way, and that final C-leg correction is likely to head back into the 200-day moving average, that big red line there. And if we break below 7,224, that should yield a minimum target of 3,000, which is one of the key levels I've just drawn there on the probability distribution chart on the left. Incidentally, the resistance level that we failed to push above was 11,000, and we had a kind of a minor double top peak out taking place just literally a week or so ago.
It's interesting actually to look at this chart. This is quite a recent chart, but in terms of the historical moves, this move down is only a very small move down when you look at the total life of Bitcoin. I know your second chart, you've illustrated this really well, and in fact if we bring up the chart you can see the way in which we've had this, you call it a parabolic rise.
Yes, well, anything that looks like a straight line shooting up, which certainly Bitcoin did do from 2016 onwards, that was a phenomenal 3,314% in only 2 years. Interestingly, in that race to the top, Bitcoin actually lost in 2017, and its peers actually outperformed if you look at Ripple and Ethereum, and we'll talk about that in the next slide. But if we look at historical data, Bitcoin gives us the most from 2010. The average drawdown risk is actually 85%. The largest is 93%, and that was in 2011. But if we just stick to the average, the minimum average, we still have another 15% just to comply with that long-term average.
Okay, the Bitcoin, of course, is the biggest and probably most well known of the cryptocurrencies. But looking at this in the context of some of the other cryptos that are on the platform, what about the likes of Ripple, Litecoin, Ethereum, and so forth?
Well, these are the top market cap coins. That changes from time to time, but still they've been the biggest and the strong for some time. Ripple actually, in that what is now becoming a race to the bottom on the bear cycle of this correction, is the only coin that is positive since the December peak of last year. So that's just around 9% net positive. But keep in mind, you've got the big bad bear there, just showing you that Ripple is positive after a cliff drop, because remember, Ripple actually gained 3,500% in only 11 weeks towards the end of last year. So because it was just so off the charts in terms of relative performance, it did have a sizable kind of correction on the downside, but because it had the biggest drop, it's now having the best stability. So in terms of price stability, not fundamentals or techie underlying news as to what's changed between coin X and coin Y, price semantics, Ripple is looking the most stable. What's interesting though, if we look at which coin is looking like the greater risk, Ethereum actually is within this triangle breakout pattern, and the danger line is just above 600. If we break that, there's a price vacuum there. That gap area I just showed there with the same statistical graph in blue shows that if Ethereum breaks through 600, we're likely to see a move certainly through 460, which is the long-term average, and then 300, another key support level.
Yeah, okay, so this is building the story for the downside. In amongst some of the news headlines that's coming through with this has been all sorts of discussions around the new coin offerings and also regulation and so forth. What about the way in which the performance has been seen on these cryptocurrencies? How does that compare with what we saw in the Y2K, the bubble that was created over the year 2000? How should we look at that in the context of what we know as the tech boom bubble?
Well, this is the investment nursery rhyme that I hope we can all remember for the future months and years ahead, because it is history in the making. Many have described this asset as a digital asset, and it is a unique asset at that. And similar to the Y2K technology boom of the mid-90s, actually, when we didn't know really what internet stocks were all about, and people were adding, as they were now, the acronym to their company name, and prices were going through the roof. Back then, it was more about speculation. And then, you know, we had the mania, we had the bubble, and then the burst. And only following the burst, as we're having now, did people then start to talk about regulation and smart money actually coming into the system. But then B, as we can see there in the third stage of this three-stage cycle, mainstream adoption and real economy application now, just right here and now, according to some estimates, despite all the crazy valuations that we've experienced, Bitcoin and crypto has only really had a 3% adoption in terms of mainstream business transactions. And the sweet spot in the market is 20%, as was the case with prior paradigms. But the key message here is this is similar to the tech rhyme of 2000. It has been bubble-like, but there is still a very long-term bullish picture here once we start to actually have a real economy application to this digital asset.
I think the interesting thing, going back to the chart, is that you put on there Facebook and MySpace. And I think we've spoken about this before, about the fact that Facebook has won out over MySpace. Explain how this applies to the current case on cryptos.
Well, this is where evolution meets revolution, and basically those that survive, the strongest and the best, are the Facebooks of the new era, whereas MySpace and back then didn't. So this might happen with 1,000+ coins. Probably about 70% will only actually survive, and that's a good thing. It's very healthy, because that means the ones that really have the infrastructure driving them, and they're actually being given blessings by regulations and smart money's backing it through ETFs and all of this type of stuff that we're already starting to see. Those winners are the ones that people will want to back, and in that realm, it is a race to the top once we get through this corrective stage.
Yes, and the corrective stage, you said on the traffic lights that you're using there, you overlaying obviously the way in which the tech bubble has worked its way out. Going back again to take a look at where we are on this chart, the red, amber and green traffic light. How long is it going to take for us to finish off what is that red box there and go through that point of regulation and come out the other side? Are we talking multi-years? Or, as in we saw the massive parabolic rise, the speed with that, just unbelievable. Is it going to be a very fast bottoming out?
I think it might be a mix of the two. It's unclear now, because it's such a new paradigm, and technology innovation is just at such a whole new level. We're likely to see a compression of the recovery cycle that is traditional for normal asset classes. But I would say, on average, traditional asset classes take a multi-year process to repair, recover, and also go through the structural change that's required in order for it to boom, as is the case here in the third stage, the paradigm shift. We make all-time highs again. So the longer it takes, the better for the market, really, because it just basically means that we're starting to really think, how does the economy, the real economy, benefit from this new asset? So we move away from the retail speculative game, more into, well, how does this change our lives, just like the internet stocks did in the 90s?
Okay, all right, interesting subject. Thanks indeed for joining us. Ron William from RW Advisory, taking a look at the potential play out there for some of those cryptocurrencies, certainly those that are likely to survive that next stage of the process through regulation, and then the beginning of the real adoption of these cryptocurrencies in their true form, and how they apply to our new outlook on the economy.